नहीं नहीं रुक well as Well, SBI has come out with its Q3 results. The numbers are much better than our expectations. The asset quality has improved massively. They are down to about gross NPA ratio of 3.14% when compared to about 3.52% in the previous quarter. The net NPA is also down to about 0.77% versus 0.8% in the previous quarter. So looks like, there is a write-off that might have happened in the asset quality, which might have led to improvement. Overall, the NII and PAT is also ahead of our poll. We were working with a number of, about 2.5% sequential growth. That is about 13,500, 13,600 crores. But the profit has come in at 14,200 crores. So prima facie, the numbers look really good on the asset quality as well as the P&L. The asset quality largely might have been driven by the fact that, there are higher write-offs that might have happened. Overall, the numbers really look good for State Bank of India. Trying to figure out the other numbers as well in terms of the deposit momentum and the loan growth momentum. Loan growth for the system as a whole might have been really good, was really good, about 5.5% sequentially. So the PDF advances do show that they had a loan growth of 18.6% YOY, which is higher than, about 16-17% growth that you had for the system. However, sequentially, the loan growth is at 3.6% when compared to industry growth of more than 5%. So sequentially, they might have lost a bit of market share. But this loan growth also looks good given the base size that SBI has. So over there, no complaining given the fact that loan growth is pretty healthy over here. Deposit growth is also healthy, about 9.5% YOY. But sequentially, deposit growth is really on the weaker side at just 0.6%. We also have Ritu with us. Ritu?
Well, Abhishek, like you summarized Abhishek, like you were summarizing, the numbers are above what your poll threw up. So the numbers are good. Like you said, the asset quality is also seen an improvement. Advances growth, like you pointed out, also healthy. But what really the street wants to know right now is that as the largest lender to Adani Group, what SBI's exposure to the group is. They've said previously that they're not concerned about the exposure, that it is backed by cash flows, and it is well within RBI's large exposure framework limits, which is set at 25% for group entities of the Tier 1 capital of the bank. But we do need to hear more, especially given the rout that we've seen in the last few days in the Adani Group stocks, whether the bank has any concern at this point of time. We'd reported earlier that the Reserve Bank of India also seeking details of exposures of various banks on Adani. So we'll hear or watch out for SBI's comments on that. That is going to be very critical. The numbers, like you said, they look good.
The numbers really good. Look good. Look at the NII growth. NII growth is almost 8%, 7.9% quarter on quarter, so which is substantial. Despite weak deposit growth, the interest income is up 8.9% quarter on quarter. So they might have really felt the heat on the cost of deposit side. That is what I'm able to make out. However, the yield has been pretty good. Yes, yield across the sector has been pretty good, given the fact that for last 3 quarters in a row, banks or bankers have been raising the lending rates. We have with us Rahul Malani of Sharekhan joining us on the phone line for a quick reaction on the SBI number. Rahul, how do you make up the numbers?
Sure. Good afternoon, first of all. The numbers are above estimates, consensus estimates and our estimates. In terms of loan growth, continues to be strong. However, deposit mobilization on YOY basis was at par with the system growth, but sequentially was a weak because 1%. It has shown a 1% quarter-on-quarter growth. In terms of if we look at there would have been certain 5 to 10 basis points in terms of net interest margins. And basically, the core the operating profit growth is driven by the treasury profits and the strong NII growth. Apart from that, here key focus would be in the results would be around the exposure related to Adani Enterprises of the overall group, because we got to know about the fund-based exposures, but non-fund-based exposure plus the investment book exposure will also be important to watch out for.
Well, we also have Ashutosh Mishra of Ashika Stock Broking. Ashutosh, it looks like an operationally strong quarter now that I have put in P&L details. The provision for NPA is just 1,600 crore, which is nothing for a size of SBI. The operating profit growth is really robust at 35.6% YOY and about 18.9% quarter on quarter. So, Ashutosh, would you suggest that this is operationally, in terms of P&L, it's a strong momentum this time around?
Yes, operationally, result is very good in this quarter. If you look at NI, other income, both the line. Only thing is that the quarter-on-quarter staff employee expenses has gone up. So we just need to see whether they have started making provision for the next wage settlement as such, because few of the public sector bank has that done. Apart from that, the operational result is very good. On NPA front also, overall performance looks quite satisfactory for the bank.
Well, Ashutosh, as you mentioned, NPAs, the gross NPA at 3.14% is perhaps one of the lowest that you are seeing in last 30 odd quarters. In my Excel sheet, it's about 29-30 quarters. The gross NPA ratio is the lowest over there. In terms of absolute value, it's almost in line with what certain analysts were estimating, 98,346 crores. Gross NPA down about 7.9%, and net NPA is down 0.37%, about 23,500 crores. So it just looks prima facie that gross NPA might have, certain element of write-off, which might have actually aided, the gross NPA improvement. And slippages, as we all know, Kotak Securities was estimating around 7,500 crores. So we need to wait from the management with respect to slippages details. Ashutosh, with asset quality being benign and loan growth momentum for the sector being really good, however, we might not end up the year with 18% kind of growth, but even a 15-16% on a sectoral basis, the loan growth would look good for FY23, right?
Yes, the loan growth look quite good, and even on deposit, we have to see that SBI is carrying excess SLR at this point of time. So instead of raising deposits, they will definitely try to first utilize the excess SLR, so that their P&L will be much better compared to many other banks similar size of the bank.
Well, Rahul, if I could come back to you, we've seen operationally the numbers look very good. Asset quality is solid. It's seen an improvement sequentially, even if it's a bit marginally. Provisions have gone up quarter on quarter. But what would you want to hear from the management in terms of commentary? Any additional details that you would be seeking?
See, basically right now the focus or the whole focus would be on the exposure regarding the Adani enterprise, whatever the whole total in terms of non-fund based as well as the investment book. And apart from that, in terms of numbers, as you mentioned, that overall commentary around the loan growth trajectory, and because overall asset quality outlook continues to remain stable to positive for the overall sector. So going forward, loan growth outlook will be because there will be a normalization in the loan growth as well as. And if you look at the excess liquidity which all the PSU banks are carrying, historically they have been carrying the excess liquidity. So there will be certain normalization in the loan growth.
All right. And Ashutosh, what would you be watching out for? Rahul said, of course, any comments on exposure to Adani and outlook on the loan growth, the spurt that we've seen sort of normalizing now. Of course, the slippages figure is still awaited and the asset quality, like we've been saying, has improved. And that is exactly what the SBI management had guided for, that compared to the previous year, this year, asset quality will see an improvement.
Yeah, so I will be more looking of, apart from these important points which already been raised, deposit growth momentum, what is they are thinking on that, what type of, cost increase they are seeing in the SBI as well as in the system. Second important will be the employee expenses, what type of trajectory they are going to see, because we are now seeing the next, the wage settlement provisioning has been started across the public sector banks. So what type of impact they are going to see of that, and also whether they will transition from the old accounting system to Ind AS, what will be the impact on the bank because of that.
Ashutosh, what kind of stock reaction are you expecting come Monday for State Bank of India?
currently, if you look at focus was totally on the Adani Group exposure as such, and whatever they have disclosed till now, it doesn't look that their P&L will be impacted because of Adani exposure out there. Somewhere, we will see. I expect positive reactions to coming in because things will be much more clear post the con call on that front, and even the operating result is very good. So I expect a positive momentum in the stock next week.
No doubt. And Rahul, final thoughts from you as well?
So much clarity would be received in terms of the con call. So apart from the Adani Enterprise, which stands as a continue, which will be discussed in the con call. Apart from that, the numbers will look good, and I also expect positive momentum on Monday.
Well, it is operationally a very strong quarter for SBI. If you take a look at the internals which have just come in terms of press release, the loan growth is actually at 17.6% YOY and about 3.25% quarter on quarter. The credit cost has declined substantially. The annualized credit cost is about just 0.21% or about in terms of absolute value a little under 1600 crores. So operating profit growth has been pretty strong. The NII growth remains robust despite the fact that they had lack of deposit growth. Now, the management did tell us last time around that they will be using a part of their investment book if at all the cost of deposit rise. So for the loan growth over here. So we are seeing that momentum over here. However, the CD ratio still remains at comfortable level or below industry average at about 74.4%, which is comforting given the fact that for another quarter they can grow the loan growth without any hiccups on the deposit side. So overall strong operation performance coming in from SBI. Back to you, Ritu.
Thanks, Abhishek, for wrapping that up. We're just standing by to hear from the State Bank of India management that is set to brief the media on their third quarter earnings. For those of you just tuning in, State Bank of India has just reported its third quarter numbers. They're better than what the street had estimated. Credit growth of 17.6% YOY, domestic advances growing by 16.9%. Those are good numbers from SBI. The gross and net NPA ratios also improving sequentially. Net NPA down to 0.77% for the quarter, and gross NPA at 3.14% for the quarter. The slippage ratio for the third quarter stands at 0.41%. We're still waiting for the fresh slippages for the quarter. So stay with us. We'll be back with more coverage on the State Bank of India numbers. For now, we'll just take a short break and be back with you in a moment.